Hello, beautiful people. Samson Williams here from Milky Way Economy. We're the lead investor into BRITE.us investment crowdfunding done BRITE. And so because we focus on economics, I'm going to share some research with you about how crowdfunding creates more investors, creates a whole new class of investors. It's actually pretty straightforward, but it's awesome. You're going to be like, oh man, Samson, hadn't really thought about that yet. So a quick sip of tea. We have our magic stylus. I've already cheating. I've already drawn out some of the different ways that capital is formed. So just to walk you through, so crowdfunding right here, people are looking to raise anywhere between $25,000 and underneath the new regs for Reg CF, you can raise up to 5 million. So we'll just put 5 million here. And so the great thing about crowdfunding is if you're an angel, typically the minimum investment for an angel is $20,000. If you're a VC, your minimum investment is going to go up substantially. So if you've ever seen Shark Tank, it's like, hey, we're going to offer you $100,000. And if you're in the hedge fund or private equity, you're in the millions. You're well into the millions. You know, you want to do a 100 million deal, your bank capital, you want to do a $500 million deal. And so very few people are angels. So it's about 3% of the population qualify to be angels in the sense that they're sophisticated and not sophisticated, they're accredited investors. And so they only equal about 3% of the population of the US. And so why this is important, because when we talk about crowdfunding, we're looking at a different minimum investment to get into a crowdfunding deal. Depends on what platform you're on, but the minimum investments range anywhere from $100, let's close that out, to $250. So while, and these are dollars, not thousands. So while not everyone might have $20,000 to be an angel or $100,000 to be a VC, a lot of people have $100 or $200. And this is why crowdfunding is such a good thing, because at the end of the day, it generates more investors because it expands these accredited investors. And here's a crazy thing about wealth. Wealth is a learned behavior, but in order to start your journey from just being an average working Joe to perhaps being rich to then being wealthy, you gotta start somewhere. And this is why crowdfunding is not so much disrupting angels and VCs, hedge funds and private equity, but what it is doing is taking people who would otherwise, there's nothing wrong with being a saver. Savers are great for the economy. It's taking them from just being passive savers to being active investors. We love active investors. I'm gonna write that down. Is a whole new crowd of active investors. So that's in crowdfunding. They're active investors. They were sitting on the sideline, they were saving money, but they're saying, you know what? I want to put $100, $200, $500, $1,000 into a business that I'm a customer, because these active investors are also called investors. So let's put that down here. Investors. And so investors are super key, because investors, the question is, what's the lifetime, what's the lifetime value of an investor? That's a good question. What is the lifetime value of an investor? Not someone who's just going to be your customer, meaning they buy your good product or service, but also someone who believes in your business so much, loves your business so much that they're already a customer. Now they're actually an investor. They have skin in the game. What's that lifetime value? We don't actually know. We're working on that. Let's just say it's substantial. So this is why crowdfunding is so great, because at the end of the day, it increases the number of investors. It takes it from this little shallow pool of 3% of accredited investors, right? These folks over here. An accredited investor is someone who makes more than $200,000 a year and or has more than $1 million in assets, excluding their home, their primary residence, I should say. So by increasing the number of investors, you're getting people accustomed to not just being savers, not just being spenders, but also being investors. And this helps with capital formation, both in crowdfunding, both at the angel VC. And of course, ultimately, when companies go public, this is sort of the inverse at IPO. When companies go public and they do an IPO, then some amazingness happens. Let's get rid of these. Some amazingness happens when companies do their IPO, because the same people who invest in IPOs also put money into the public who invest into IPOs. They're the same people who are investing in the crowdfunding because they're investing that minimum investment. And this is a beautiful thing. When people learn how to become investors, then they're looking for new deals. And so ultimately, crowdfunding, it doesn't really compete with angels. It doesn't compete with VCs. What it really does is it engages people and turns them into active investors. It takes them off the bench, puts them in the game and says, hey, you too can participate in this ecosystem. So that's it for the moment. I just wanted to share that quick thought with you. My name is Samson Williams. I'm a senior economist over at Milky Way Economy. We're the lead investor into BRITE.us, investment crowdfunding done BRITE. So we're making some educational videos to help explain what is crowdfunding and why does it exist. If you have any other questions or comments, drop them down below. Send us your question. I'll make a little video for you. I'll grab my buddy George. We'll make some as well. In the meantime, if you are thinking about raising money, check out BRITE.us, investment crowdfunding done BRITE. We'd love to have you. Till then, be well. Peace.